Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will update our classical technical analysis view over the short term for NIO stock, and we will check the reversal conditions required for the downtrend to change. First of all, and as usual, let us start with the major structure of the stock over the monthly chart. And as we can see, the stock don't have such a big history. We do have maybe three and a little bit more years of history in the New York Stock Exchange market, and the monthly resistance is the same at $57, as well as the monthly support is the same at 1.28 cents. Of course, when we talk about significant key levels over long-term charts, we are talking about areas, zones, and not clear-cut levels. These areas and zones tend to be larger and more thick as the price goes up, and tends to be more thin as the price goes down according to volatility. So, as we can see, over the monthly chart, we did have a kind of what we can say a hanging man, which is going to relatively push the stock a little bit more to the upside. This level of around 13.12, which was the lowest level for a previous hanging man over the monthly chart, and it was the tip of the lower shadow, managed to create a support over the previous 3 or 4 months. That's it for the monthly chart. Nothing special. We do not have a clear-cut trend. Maybe a trading range over the long term in the formation process, not yet confirmed. Over the weekly chart, we will check the long-term picture, and it is very clear that NIO is in a valid and confirmed downtrend formed from or consisting of lower highs as well as lower lows. And here is the trend line, and here is the channel line. And as we notice that the stock is still within the downward channel over the long term, although there is a kind of correction over the short term. The stock is considered to be in a bearish environment over the medium and long-term picture, as long as it is below 25.50 zone, which is considered to be this area. Now we need to check the daily chart to see and explore the short-term details. Here we can see that the stock is facing a very important resistance zone starting from 23.90 up to 25.80. Therefore, over the short term, we do have a resistance zone with around $2 thickness. And keep in mind that the downward trend line is moving through this area. That's why this is considered a very, very strong resistance area, consisting of 3 or triple resistance levels. 2 of them are short term, and divided with a long-term downtrend from the weekly. So in order for NIO to complete the reversal pattern, which may be a double bottom, the stock needs to break decisively above 25.84 on increased volume, notable increased volume, and close above 25.84 at least 3 consecutive days, and these closings should be on a relative lower volume than the day of the break. Then and only then we will consider the trend is over and the reversal pattern, which may be a double bottom, completed at that time. Otherwise, do not get into a race against the stock and try to have a bullish decision now, because the stock is considered under selling pressure as long as it is below the mentioned resistances ranging between approximately $24 up to $26. After a valid break, we may put tactics into action in paper trading on a buyer side with targets over the short term that can reach 32, which is the horizontal weekly resistance. Okay, last thing I want to say, that we do expect the double bottom to be complete and to be valid, but do not jump into the stock as a buyer before the pattern is complete. What makes me think that this double bottom may get completed are the increased volumes over the jumping price gaps and in the bullish candles. We can see here increased volume, and upward price gaps are not common during corrections. If you go a little bit back in history, recent history, we notice that this correction had no price gaps, not a significant upward price gap. But here we do have 2 upward price gap plus considerable volume on a bullish engulfing Japanese pattern. So some clues are being given gradually, step by step, that this may be a double bottom in formation, in the process of formation. But do not jump into the stock before it breaks the mentioned resistance on high volume with 3-day close above its upper limit, which is around approximately $26. After this, we may put the tactics into action. What if, the difficult question, what if the stock did not manage to break above this resistance? At that time, the bearish environment persists and it may return back down to 13.12. What we are waiting for now is either a break above the mentioned resistance, then we will be bullish, or a reflection from the resistances, then we will be at that time considered bearish. Here we will do virtual trading on the buyer side, but here we will do virtual trading on the seller side. Here on going up, we do have 32 as a short-term target. Here we do have $13 as a short-term target. So keep in mind, that the stock is not on its way up unless $26 is broken to the upside, as we mentioned. That's it for NIO. And don't put your tactics into action unless the conditions are met and the pattern is completed, so that you can make sure that the risk is at its lowest point as much as possible. Thanks for watching. Please feel free to subscribe, like and share, and see you soon.